morning and welcome to the VSA Morning Miner. It's Tuesday, the 26th of August after the bank holiday weekend. Paul, how are you?
Very well, thanks. Very well. Did you have a good weekend?
Yes, thanks. Yep, it was nice and sunny and back to plenty of mining news, and Andrew still in Mexico until the end of the week. So we'll start with news out from Avino buying back a royalty on their growth project.
Yes, that's right. Avino Silver and Gold, the silver producer down in Mexico, they have bought back a royalty on the La Preciosa project that Terra Royalties had picked up when they had bought out Trident Royalty. So that's a purchase price coming in there at 13.25 million on an upfront payment and another 8.75 million in a deferred 1 year payment. And what that does is it removes the existing royalties on La Preciosa, such that they do have the opportunity now uh, on having further reserve additions later in the mine life here to not be covered under the royalties as they would have been under this previous arrangement. So it's a good use of funds, I would say, in order to make sure that the best production cost margins are retained.
Uh, Yes, in June, I think Avino had reported they had US $37 million in cash. That's risen pretty quickly over the last year, so they're in a good position to make these upfront payments. And I think the structure of the royalty, as it was, being a sliding scale on production depending on where it came within the original resource, but then with a further fixed payment that could be indexed to inflation based on new reserves, could actually have ended up being quite expensive over time, and obviously freeing up an additional bit of margin at the ramp up phase is going to help with the execution process. So lots of reasons to bring those payments forward and buy back the royalty.
Yes, I would agree with that.
Um, we've also got an announcement, well, from a recent entrant into Mexico in the silver space, but today's news largely on their US projects, Apollo Silver.
Yes, that's right. Apollo Silver had added two important people to staff. Ross McElroy brought over a guy that he'd been working with at Fission Uranium by the name of Tony Gonzalez. And Tony's going to be senior project manager for him out there at the Calico Silver gold deposits in Southern California. He's worked with Ross for quite a good number of years, so that's more skills from the fishing team now into the skill set of Apollo. And there's also a technical advisor added here by George Kinline, and his thing is about ESG leadership and sustainability stakeholder relations. So that'll be important because it is Southern California, but it's this deposit is also close into one of the tourist attractions there in Southern California. So dealing with concerns around that for mine development will be his job in particular. The company also mentioned that they got a 12-month extension on the temporary use permit on the Waterloo area, which means that they can drill it this year to find further extensions to the gold mineralization, which is underneath the silver zone. And they also, on the Langtree deposit up to the northwest of the Waterloo deposit, they got a 9-year option extension on the Strachan portion of that property. So that gives them additional exploration flexibility there.
Yeah, new management team really getting things going after a couple of years of go slow, and all benefiting from higher silver prices as well. We've got one more precious metals name to cover, omai.
Yes, omai gold mines. That was my gold choice for this year as far as performance is concerned, as a share is concerned. omai gold with a new resource estimate out on their omai gold project in Guyana. Specifically, what they've done is they've been able to add resources to the Weenot deposit, which is the initial primary open pit one. But they've also put a underground development model resource around the granite or Gilt Creek deposit, which was previously or historically mined as an open pit. What it does overall, you can look at the press releases yourself because it's fairly a good breakdown of the resource statement. But it moves them up above a total of 6 million ounces and still growing in size. And we're looking at a grade profile overall that's real close to 2 grams with an underground grade on that Gilt Creek now at about 3.33 grams at this point in time. But both of these deposits are still open ended, as well as other targets on the project. So still to grow here.
Yeah, up 256% year to date. So you're definitely in contention for a winner there, Paul. And lastly, Marimaca, the copper project in Chile, they have announced their DFS.
Yes, that's right. This is a DFS for their oxide project, specifically for a Solvex SXEW project. It looking pretty good there. Pre-production capital cost 587 million, and a capital intensity down at the low end as far as global projects are concerned at $11,700 US per ton of copper metal production. Going to be a simple open pit mine. It's designed to have a less than one strip ratio and a 13-year mine life on this oxide heap leach. Recoveries anticipated in the middle 70s range with a cash cost of about $1.84 a pound and all-in sustaining costs at $2.29. So all the numbers coming together to show that this, as designed, will have a good profit margin as an oxide leach, but there is a lot more sulfide to be further defined in later years here. So they are designing the equipment and plant to be oversized initially for that eventuality.
Yeah, the share price there as well has had very strong performance, 292% year to date. Most of that coming in the last couple of months, and now about 1.2 billion Canadian market cap. So very much a premium rating against that MPV from today's feasibility study. I think we'll call it a day there, Paul, and we'll be back tomorrow.
Very good. See you then.
This podcast has been produced and edited by VSA Capital. It is intended for information purposes and not as investment advice. The information is intended for recipients who understand the risks associated with equity investments in smaller companies. Please do your own research and do not rely on a single source when making an investment decision. VSA Capital may derive fees from this content and seeks to do business with the companies mentioned.